Hey guys, Stock Saturday, and I thought I would take a slightly different approach to the video this week. Some people have sort of been saying the spreadsheet format can be a little bit dry, which I can appreciate. I was sort of thinking how to do this, but yeah. So the portfolio as a whole is down about 3,000, but we have had some fairly big movers in that. So thought I would just highlight sort of a few that have caused the impact, basically. So I'm not going to go into detail on Argo, but that certainly has caused sort of part of the move. Ended up 33, just under 33% up in the last week. Did spike up quite high during the week and was sort of at one point about 88% up. Didn't invest my £100 dividend, so yeah, didn't get that gain, but yeah, nothing's happened really here. This is just sort of a bit oversold, maybe people getting a bit enthusiastic selling, and Bitcoin sort of up a little, so people are slightly more confident. But yeah, so that's caused part of the gain to offset some of the big losses, like Meta Platforms. So yeah, I've been sort of reasonably bullish on this, and maybe sort of for the wrong reasons. Sort of keen on the metaverse side and the sort of crypto side, but it is going to be probably longer term than most of us think, and everyone else basically isn't happy with the losses. So all the headlines are, they've lost 9 billion this year on the Reality Lab side, so that'll extend. So it's 3.6 billion this quarter, and they've said this will be increasing over time. So you're probably looking at more like sort of 13 billion for the full year. So yeah, that is quite a big loss, but I do think sort of a little bit of focus has to be going into exactly what they are spending it on. Some people will see this as completely dead money, I guess, but yeah, I don't think it's quite that. Obviously, they're losing money on every headset that they sell, from what I understand. On the ordinary Quest 2, sort of the Quest Pro, the new one is $1,500. So haven't sort of been able to dig into whether they're actually making a loss on that, but I wouldn't imagine they're going to be selling a huge amount of them. But yeah, so there's a lot of R&D that sort of goes into making the headsets and making the sort of virtual world, their metaverse side, and yeah, the sort of tech behind it. So it isn't going to be producing a huge amount of revenue sort of at all just yet on the R&D side. But the other thing they're sort of spending money on is acquiring companies still, which I don't think gets highlighted enough. So they've just bought the developer of Resident Evil 4 VR, which has sort of been doing quite well. It came out before, I believe, on PlayStation 4, and they've ported it over to the Quest store, and that's sort of done quite well. It made $2 million on the Quest store in 24 hours, and yeah, it won Best VR Game at the 2021 Game Awards. So pretty good, and they've acquired them and Camouflage and Twisted Pixel. So buying a game studio which don't really sell sort of a huge amount of games just yet. They're sort of young studio. Obviously, they haven't sort of disclosed the amount that they spent on them, but they're not going to be making sort of the revenue that I would imagine that they've paid for them. So yeah, it goes down as big spending and big loss and that sort of thing. But they're sort of young companies that are going to grow, and I sort of see this the same as Tencent. Really, you're sort of spending 100 million, 200 million on a studio that sort of might be making, as you can see, sort of 2 million in 24 hours. They might make 20 million or something on that game. So it's quite a small sort of revenue gain for that spending, and it just goes down as $9 billion lost. But yeah, I see this as sort of some of it is money well spent, and some of it I would imagine he's lost money. But just to dive into the financials a little bit more, so revenue still sort of on an annual basis is sort of slowing down a little. On the quarterly, it's sort of pretty flat down year on year, the quarter. So last Q3 was a little bit higher, but this was still during sort of lockdown times and that sort of thing. So yeah, it's kind of expected, but last time they were at this share price was sort of 2016 or so. Yeah, and that was less than half the revenue back in 2016, and yeah, sort of more like $4 billion net profit. So now to be at probably going forward, if you take 4 billion, maybe sort of 3 to 4 billion per quarter next year, probably looking at, I don't know, 12 to 15 billion net profit next year, which is obviously a lot less than they were making, sort of 28 billion and up to 40 billion in 2021. But yeah, I think that was kind of an anomaly year. Obviously they could make that or close to that if they were to just scrap all the metaverse stuff and basically just sit on Facebook and Instagram and milk them to death, but I don't see that as a long-term future, really. It might be what the shareholders want, or the other shareholders. I'm a shareholder. But yeah, I didn't think this looked too bad. One thing I did notice that sort of isn't being highlighted a huge amount is they took on some reasonable amount of debt. So yeah, total liabilities. They've always had the capital leases, which you can count as debt if you want. Some people don't. But yeah, 9 billion or nearly 10 billion in long-term debt just been taken on. So yeah, that's not the best, and that would obviously drive down the price a little, which isn't being highlighted in the news items. It's just Reality Labs loses a fortune. Cash, it looks like, hasn't changed a great deal, and sort of property, plant and equipment and what they are spending on has gone up a little. So shareholder equity hasn't changed a great deal at all, come down 1.7 billion. So yeah, the debt and sort of this quarter's money ends up going on intangible assets and property and that sort of thing. But yeah, not horrendous, but I did think the debt was a little bit disappointing. Didn't quite think they needed to be taking that on. Yeah, just looking at the analyst estimates as well. I will say I don't like price targets because that's sort of giving more of an opinion from the analysts than I really want. But just looking at their EPS target, certainly has been coming down. Next year now they're sort of predicting $8.53, where a few months ago they were saying $12. This has obviously been affected by the Apple news, sort of allowing them to track users a lot less. But yeah, sort of $100 compared to sort of $8.50 potential next year still seems like a reasonable buy, and you can adjust the price a little bit for the net cash if you like. They've still got sort of 40 billion in cash, so sort of 25 to 30 billion net cash, depending on how things go. So yeah, you could be looking at 11 times forward earnings, 12 times net of cash, which I thought was pretty good. So yeah, I don't think it's the horror show that everyone's making out, and I am certainly considering some other holdings that have sort of been performing reasonably well. Lennar, for example, is up on the week, and yeah, I'm sort of less confident about the US housing market sort of going forward. I'm not touching my UK house builders and REITs and that sort of thing, but yeah, Lennar sort of, especially with the FX impact as well. I think I'm 10% up on that overall. Doesn't show here because it doesn't show the FX impact, but yeah, considering sort of swapping my Lennar for Meta Platforms, even though this might be a little bit early in the drop, and there could be more of a drop to come. But yeah, let us know your thoughts on that. Then the other big faller is basically all things Chinese tech. So Tencent is sort of one of my larger holdings through Process, and yeah, that's taken a reasonable hit. Looking sort of doesn't really show it on the 5 day, but on the monthly, you can sort of see previous week it dropped down sort of 12%, I think, on the day. China had their conference, basically sort of re-electing President Xi, and he's ousted sort of a lot of the people that didn't necessarily agree with him, and sort of appointed a load of loyalists basically up to his sort of senior bench. So yeah, he's in for a third term, and basically he can sort of largely enact whatever policies he likes now without too much backlash. So people are seeing this as potential extension of the zero COVID, which hasn't been particularly good for the economy or certainly the stock market. But he sees that as something worth doing, calls it the People's War. And yeah, there's a lot of other sort of measures that obviously he's been pushing through over the last year, sort of attacks on the video game industry, and some sort of policies towards anti-competition, which I kind of agreed with at the time. Do think sort of from the looks of it, Alibaba and Tencent sort of have an enormous hold over China. Certainly, I mean, Tencent's WeChat sort of basically looks like you can't breathe without using sort of some part of it. They're so sort of ingrained in the public. So yeah, they do need a little bit of regulation every now and then. But the whole sort of common prosperity is potentially hitting profits a little to sort of redistribute to the less well off. But I sort of see long term as raising sort of the less well off into potentially middle class. You know, you could get 2, 3, 400 million people sort of coming into middle class and potentially sort of spending on products and services and that sort of thing from both Alibaba and Tencent. So don't necessarily disagree with all of this. A lot of people will see it as short-term bad for stocks, but yeah, I'm not quite so bearish. Obviously, he has been talking about protectionism and security and that sort of thing. I guess we all have to hope that doesn't mean invading Taiwan. But yeah, I think sort of part of that is basically developing their own chip industry. They've sort of mentioned that. So they have SMIC, the sort of competitor to Taiwan Semiconductor, and I think they're going to have to push that sort of a fair bit further. They may even have to try and sort of develop their own competitor to ASML to actually get the machines to build the chips, which is sort of no mean feat. They're still, as I understand, getting sent the old equipment from ASML, but they're not allowed the new equipment. So yeah, they have to have the machines to produce the chips and the foundries to actually run them off the production line. So it's no small feat, but I sort of see that as hopefully what he means by protectionism. I really can't see that they would gain a lot on the global scale from any sort of invasion and war and that sort of thing. It just doesn't seem like the way they want to go. I think they would sort of prefer to just wait years and years and maybe even sort of try and get Taiwan to integrate sort of diplomatically once the rest of the world doesn't need them quite as much. So that's not necessarily a good thing, but it would be sort of less controversial to the world, I think. So yeah, that's been sort of what's bringing down the Chinese tech stocks a fair bit. So it's brought down Tencent to $252 billion. Did sort of go a little bit lower earlier in the week. And yeah, I still see this as a pretty good price. They do still a little bit unsure as to how to get their portfolio value. They do sort of report it on a 13F as sort of $88 billion. I think this is probably more like $80 billion now with the recent drops. Pinduoduo, I think, is sort of more like 40 billion. But I'm still unsure as to whether this is all of their holdings. This is what they sort of publicly report. But I mean, I found this sort of portfolio from a while ago, and yeah, it was quite public that they bought like 5% of Activision Blizzard, 5% of Ubisoft, and sort of a number of other companies really. Some other tech companies, sort of 12% of Snapchat, and yeah, sort of lots of companies really. So to not see any of those on the 13F just seems a little bit strange. As I understand it, they sort of took the stakes in Activision and Ubisoft and people like that to sort of get the distribution rights in China. So it seems strange that they would sort of sell out of those and sort of potentially lose those distribution rights. Yeah, and you've also got Spotify and that sort of thing, as I believe, yeah, isn't not here. And then the big one is Tencent, which they sort of bought 5% of Tencent a very long while ago, and that sort of over time got diluted to 4%. And I've sort of read one article basically saying that they sold it they sold a very large portion of it in 2019. But there's basically no other sort of factual records of when they sold that, and it would have been sort of $25 billion stake at the time, so I would have sort of expected that to have been more public knowledge. They're not listed as a holder on any sort of Tencent holdings, sort of top 10 holdings or anything like that, but I'm not sure they ever were. But yeah, so it's a little bit strange to try and get exactly their overall portfolio. Again, sort of not sure how they deal with Epic Games. They certainly own 40% of Epic Games, and that's sort of not listed here, I guess, because they're not publicly traded. But it's how they sort of account for that in their earnings. If they're not direct earnings, then do Epic Games sort of revenue and profits get pushed into here? I wouldn't have thought they do from what I've read. But yeah, so I do think there's certainly money on the sidelines here. It's a little bit like Berkshire Hathaway. You sort of have the core business, which is your software, WeChat and sort of the cloud business and everything else they do, and then you have the sort of portfolio basically of other stocks and sort of private holdings which don't necessarily contribute to these earnings. Things like Riot Games, I would imagine they do include, because that's 100% owned by them. But yeah, things like Epic Games, from what I understand, I don't think 40% of Epic Games' revenue and profit goes into these figures. Similar to, as I say, Berkshire sort of have the big holding in Apple, and I think all they report in their sort of earnings is the dividend that they receive from Apple. But the obviously bigger part of Apple is buybacks, and sort of all of the rest of the profit that they reinvest into the business isn't getting shown in Berkshire Hathaway's earnings and figures. So yeah, I do think Tencent sort of is a potential buy. Again, sort of looking at my other holdings and wondering sort of whether to top up Process a little bit more. Is already a fairly big holding, sort of £6,000, which has dropped down. I did sort of put a reasonable amount into it a couple of months ago, and I think that was selling my Nintendo stake. So that's not gone well. Nintendo has held up sort of pretty well since I sold it, but you got to make the move at some point. And yeah, as far as the rest of the portfolio goes, there've been sort of a few movers here and there. Shell has done quite well. Their earnings came out and were better than some people expected. This quarter was worse than previous quarters, as expected, sort of with the drop in oil and gas prices. But yeah, still looking pretty good. House builders sort of having a slightly positive move. The miners sort of coming down a little. Commodity prices sort of not holding up all that well. But yeah, otherwise not sort of a huge amount of move in there. I didn't spend my cash still, but yeah, we'll see what happens with that in the next few weeks. And yeah, on the ISA side, Sylvania Platinum dropped as expected because of their dividend. It was slightly more than the dividend, maybe due to sort of slightly falling commodity prices, but yeah, they're sort of doing okay. Potential sort of been reading about, somebody posted about their sort of new mine that's upcoming and sort of includes nickel and a bit of gold. So that was quite promising. Nice bit of diversification for them, not sort of quite as heavily reliant on the sort of platinum group metals. Potentially, it's not going to be coming online straight away, but yeah, nice one for the future. Yeah, and the REIT's sort of not doing too bad. The ISA sort of hasn't really moved all that much other than the Sylvania Platinum drop, but that'll be getting a very nice dividend in December, and we'll have to decide what to spend that on. And then yeah, so the miners have gone up ever so slightly, or the crypto miners have gone up slightly, and yeah, the other miners sort of holding their own. And then Chinese tech, Alibaba and Baidu, both dropped with Tencent on all the Chinese tech. So yeah, interesting. Let us know your thoughts on your portfolio this week, and sort of how you like the new style of video. If you've got any suggestions, then certainly leave them in the comments, and like and subscribe. See you soon.